Start with ITC. Considering that it's been a budget which is focused on rural India, the government's aim is to double farmers' income by 2020. Let's try and understand what this could mean for ITC. We've got on board with us S. Sivakumar, the Group Head Agri and IT Businesses at ITC. Mr. Sivakumar, the budgetary focus was on rural India and farmers. Clearly, a more populist than balanced budget. Would you also agree with the same?
I think as someone said, this should be considered more a popular budget than a populist kind of a budget. The reason I am saying that is because, the whole reaffirmation of the government's mission to double the farmers' income by 2022 has been done once more together with various policy measures as well as financial allocations. In the sense that it's been comprehensive, whether it is in raising income for the farmer or trying to manage his risk, or in value addition through processing and diversification to multiple sources of income. So I think it is not just allocating more funds or waiving loans and that kind of populist kind of an effort, but more comprehensively dealt with the whole issue of agriculture, where incomes obviously have been lower, farmer expectations have been high. Together with the last two budgets, if you take, I think it is among the most comprehensive effort at raising the farmer incomes.
Hits and misses according to you. While the announcements are well intended, implementation is key, as recent history also shows that farmer income has not improved much despite record output last year.
No, certainly implementation is very critical, but let's look at what are the hits and misses in this budget and then combining with what was done over the last couple of years as well. I think the most critical decision taken this time is to assure the farmer of a profit over the cost. Of course, by itself, it can lead to things like inflation, or it can lead to inefficiency in farming. But seen together with other measures, I think it will be a very important kind of a principle that's been enunciated, saying that a farmer's income will be assured over and above the cost. I'll come back to the issues of implementation to say how does one really actualize and yet make markets more efficient and so on. And some of that is already signaled by saying the price of what the produce would be after the harvest will be brought into the market focus by virtue of futures, options, whether it's warehouse receipts and other measures on exports and imports and so on. So therefore, managing that from a market perspective is other important step. And one long-standing issue in the Indian context was lack of availability of formal finance for lessee farmers. A lot of farming happens through leases, and by trying to bring those farmers also into a formal credit mechanism, I think has been a very critical step that's been announced in this. And another source of diversification is from solar power that farmer can now generate, and it's been experimented over the last few years, and potentially I think with the amount of sunlight available over the farms, not only will it reduce the power bill of the farmers, but also it will be more efficient use when you do it with this new pumps and solar power.
So what are the areas of opportunity from the budgetary announcements and policy measures?
So ITC, as you know, of course, engagement with the farmer is across the whole value chain. Not only what is visible as segment agri in the ITC accounts, but agri provides the back end for a significant part of the value chains where we have consumer-facing brands in the packaged consumer goods business. And so to that degree, the reliance of ITC and agriculture is fairly substantial. And therefore, the engagement of the farmers has been across the whole value chain, right from getting the right farming inputs and ensuring farming remains profitable so that it is sustained, and things like water, and eventually taking to value addition and then putting them in the brands. So taking from that perspective, I think some of the interesting measures we have seen in this budget. One, of course, is the announcement that the rural hearts will be converted into agricultural marketing infrastructure, so that you bring markets to the farmers much closer. I think this is a great complement to the ITC's e-Chopal infrastructure to actually getting the markets much closer lowering the cost and aggregating the goods at one level lower than the current mandi infrastructure or the other warehouse infrastructure which happens. So I think that is something that we will examine in terms of what is the best way to link up to these upcoming potential agri market infrastructure, the grams as they call, with the deep e-chopal infrastructure. Other is more recently you have seen the launches of ITC in various variants in the packaged goods for fresh potato and as well as processed onions with the announcement of the TOP, the tomato, onion and potato as Operation Greens. And as we speak, the first meeting is already happening with the government convening in terms of how do we action this intent and the significant budget that has been allocated for this. I think it augurs well for our various plans for entry into larger vegetable and fruit sector, and in particular the tomato, onion and potato that has been talked about.
But how much does agri contribute as a percentage of ITC's consolidated financials?
Sure. Now, if you look at technically where is agri-business in the larger revenues of ITC, one would see hovering between 16–17% typically on an annual basis. But there's only one dimension like you also mentioned. The agri is the back end for the entire packaged consumer goods business. To that degree, it is also embedded in ensuring that those brands get a competitive edge in the marketplace. And it is for those brands when they are looking at developing inclusive value chains, that is where the agri plays a role in terms of building that triple bottom line vision that has been outlined by Mr. Deveshwar, like you mentioned. And the reason why, while you talk about over 70% coming out of the tobacco vertical and others is lower, is more because these are businesses where investments are still occurring, brands are getting built, new categories are getting continuously rolled out. So as a result, when one would look at the share of the investments and share of the total employee force and so on, one would see that the skew is towards significantly towards the newer businesses. The idea being that all of them build up into the aspiration that has been shared in terms of 100,000 crore packaged consumer goods business.
So how do you see the agri piece of GDP growing versus industrial, manufacturing and services sector in FY19?
So agri, I think from an export perspective, like I just mentioned, will still be operating at lower than potential, largely because of very strong rupee compared to the prior 2 years. I think the focus as to where the agri GDP will grow will be more from diversification of crops and broader rural also, some of which doesn't get covered in agri because some of that gets covered as part of either manufacturing or processing as well, but it's broader as part of the rural economy. And I think where rural will support the larger growth is with much of this government spends moving in the infrastructure in rural areas, as well as price supports coming in terms of expanding rural demand for other goods and services. And I think that will have it might show up a lot more in non-agri sector, but it is rural and farmers who are creating that kind of a demand. Even in a low price year like FY18, we have seen that the increase that has happened is largely on account of this government spends on infrastructure, whether it is in public or cash flows for rural housing and so on.
Okay, so how is it that you're tracking progress of fast-growing and now large competitors in agri, consumer as well as personal care space, like the likes of Patanjali? What is your competitive strategy?
So, two comments broadly. One is, I think, in terms of a lot of action in the sector in terms of packaged consumer goods, whether it is food in particular that you have referred to, or some of them into personal care and so on, the broader consumption markets. More players, more buzz and more visibility, I think certainly will be helpful for the economy in converting a lot of non-branded consumption which used to happen in the country, partly on account of availability itself and partly on account of income and awareness. I think as some of that now with buzz created by several players in the market is only going to expand for high quality packaged consumer goods. I think to that degree, I think a lot of competition is good. To the ITC specific strategy has been enunciated and shared several times, is how do we make use of the capabilities that are available across the whole company which have been built over decades to bundle them and then bring them to the market, whether it is the consumer understanding as to typically for a given product, what are the regional variations and therefore how the product should be differing as an example, or how are the preferences across the different price points at various socio-economic segments of the consumers. And so therefore that consumer understanding supported by the trade marketing and distribution, which is obviously reaching the nook and corner of the country.
Okay, such a pleasure speaking with you, sir. Thanks so much for highlighting your views on the budget this time around and what it means for ITC for the agri division, and how is it that you're planning to take on the competitive strategy at a time like this. That's the word then from ITC.